Welcome back. We are focused on tech earnings this week. Google parent Alphabet reporting mixed results last night. Profit came in below expectations. Profit was actually down as higher expenses weighed on profits. Advertising revenue, however, at a record high. Overall sales beat estimates as well. Joining us right now is disruptive tech research founder and chief analyst Lou Basenese. Great to see you, Lou. Thanks very much for being here.
Great to be here, Maria.
What was your reaction to the Google quarter?
Look, good, not great. I think expectations coming in after 2 quarters ago, they had a tremendous beat, and all the commentary leading in was hopeful that they would this time. But at the end of the day, the core business is still firing on all cylinders. I mean, you mentioned it, that record advertising revenue up about 17% to almost $34 billion. Like it or not, Google's still a one-trick pony. I mean, they're in search and advertising. So that side of the business is doing really well. The one thing that is interesting, I used to think as Google as a cheap way and a low-risk way to play the big tech trends with those other bets, but that division still hasn't panned out yet. They're swinging for the fences, but revenue was up about $155 million, but the losses were $941 million. So a lot of swings and misses there still.
Lou, how much, this is Steve Moore here, how much is Wall Street and our investors worried about the government coming after Google with these antitrust case, which could be, you know, the next big round of antitrust action against these big high-tech firms?
Look, for Google, I think it's unique, right? They were the ones that probably got the first fines really in Europe. I feel like it's being priced into the stock. We've been talking about it for so long. I mean, it's going on 2 years now for Google, Facebook, Twitter, all the large tech companies that until Washington actually takes a step forward with something specific, I don't think it really impacts the investment case.
Just to be clear, you think the risk of these antitrust actions is already priced into the stock?
I do think it, especially with Google. I'd argue it's priced in with Facebook. I mean, you've seen Facebook stock move undeterred on any of these regulatory threats. I just think investors now have become numb to the threat of it, right? It's a lot of talk, very little action coming out of D.C. so far.
Hey, Lou, Art Hogan, what do you think about the conversations that popped up yesterday about Google taking a peek at Fitbit? I know they already put $40 million into Fossil. Does that make much of a difference to you? Do you think that can move the needle in wearables for them?
Look, I think it's strategically very, very smart for Google because you see all these big tech companies are going after the same trends, whether it's augmented reality, cloud computing, voice assistants. So this would give Google a foothold in wearables. For Fitbit shareholders, man, they better be saying their prayers that this deal goes through because that stock has just been a disaster since it went public. You know, it's a real warning to these single device companies, tech companies. I mean, think of a company like GoPro. Just couldn't make it on its own. Same with Fitbit.
Well, where Google, Lou, could really stand out is the upcoming streaming gaming platform Stadia. It launches, I think, November the 19th. But again, this is an area that Google is looking to totally dominate in a way no other technology company is. And I wonder if that's really priced into the stock here.
I would agree with you. I think people are underestimating how big of a player Google can be there now. I think most people are just completely unaware to how big gaming is in itself. So this could be the undervalued segment for Google. You know, time will tell, though.
What's your expectation for Apple coming out tomorrow? It's reaching a $1.1 trillion valuation at this point, but investors are predicting that third quarter revenue will be flat because of sluggish iPhone sales. And then, of course, there's 5G. Why would you get another phone now when you know that 5G is coming down the pike within the year?
Yeah, this is the seasonally slower quarter, right? Leading up to the holiday quarter. I think there's a lot of short-termism with Apple, quarter in, quarter out. People complain, the mantra is that they need to innovate or die. I would tell you that Tim Cook's done an impressive job just iterating and thriving. You know, $1.1 trillion market cap. I'll go on the record and say I think Apple has what it takes to be the first $2 trillion market cap company.
Wow. Oh, boy.
That's a big number.
Listen, I mean, look, I'm an unabashed and unapologetic Apple fanboy and have been since 2014.
Okay.
But I haven't lost my marbles. I mean, Morgan Stanley's analyst came out with their bull case at 407. That's almost there. I mean, to get to $2 trillion, you got to get to about $4.45 per share.
Wow. All right. We'll be watching. Lou, good to see you. Thanks so much.
Thank you, Maria.
Lou Basenese joining us. Coming up, the al-Baghdadi.